And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Scarlet Fu, taking you through the closing bell. It's our global simulcast starting now with Massar and Tim Stenovec joining us from the radio booth as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube here on this Thursday afternoon. Alix Steel taking a well-deserved day off, and she's missing a lot of action today.
Yeah.
Another sell-off here, though it looked like we were going to get a rebound earlier in the day, Carol. I'm not sure what you said or did, but stocks right now are back to lows on the day.
I did nothing, anybody, or everybody. Listen, though, I'm looking at pretty much broad-based selling because you've got most of the industry groups in the S&P 500 lower today. So you're seeing it really broad-based. It's not, for a while I felt like we had small caps coming back, but even they're having some struggles.
Yeah, I think that's what's really notable about today is that it's not this rotation trade out of mega cap tech and big names and into small caps. We're actually seeing the Russell 2000 underperform the other major indices today, Scarlett.
Yeah, within the Russell 2000, all 11 industry groups are down. The best performers are utilities. They're losing 0.9%. But within the S&P 500, interestingly, energy and utilities are holding up better than the others. Utilities unchanged. Energy stocks up by a third of 1%.
And that's been the story really over the last few days. So we are seeing somewhat of a macro story to this and maybe an interest rate story to be a little bit more specific. We should point out we get some big earnings after the bell, including out of Western Alliance and Intuitive Surgical.
Oh, is that what? It's interesting that you say those names, Romaine. There's also a company you stream
a little-known company.
Services.
Little-known,
yeah.
right?
All right, Netflix results are imminent here. Let's get you through the numbers before those results hit here. Red across the screen for all of the major indices. The Dow Jones Industrial Average down about 1.3% here on the day. The S&P down about 0.8% on the day. The NASDAQ Composite is going to finish lower by 0.7%, and the Russell 2000 down by 1.9. Netflix earnings crossing the wire right now. Let's take it, guys, here. Revenue in the most recent quarter coming in at about $9.56 billion, a slight beat over what the street was looking for. EPS at $4.88 a share, a slight beat over what the street was looking for, 4.74. And here are your streaming numbers here. 2Q streaming paid net change, 8 million subscribers added. The street was looking for roughly about 4.9. And the company also guiding somewhat higher here for the third quarter, though it does look like the revenue number might be at just a tad light. 9.7. Street was looking for about 9.8 billion in revenue.
Yeah, but what's interesting is that second quarter streaming paid net change, a big beat, as we said, 8.05 million versus the estimate. But having said that, the company also says it sees third quarter net adds lower versus a year ago. You are seeing the stock bouncing around big time, Scarlett, in the after hours. But right now we're down about 3%. I'm looking at it in real time, down about 3% here.
When it comes to free cash flow, Netflix still sees a full-year free cash flow at about $6 billion. Analysts were expecting something more at about $6.6 billion as well. Netflix may be making some changes to its debt burden. It's going to refinance $1.8 billion of maturing debt in the next 12 months. It took on a lot of that debt, of course, to pay for the original content that it's been pumping out.
You know what's interesting is everybody says that the streaming paid net change, subscriber numbers, is what everybody cares about. And this came in almost double what analysts expected, at least for the current, for the previous quarter, at 8.05 million versus estimates of 4.87 million. Yet third quarter revenue coming in a bit light, and perhaps that's why we're seeing shares down right now by 4.8%.
But I'm curious, so with the boost in that revenue forecast for the full year, is that maybe a testament to some of the changes that they made to with the ad tier and everything else?
Could very well be. That's all things that we'll need to get from the company when they host their earnings call. Let's go over now to Bloomberg Technology co-host Ed Ludlow, who is standing by. He's been looking at the numbers. Ed, what do you see?
Yeah, I think a lot of emphasis on the current period. When you saw that beat in the second quarter, 8.05 million new subs, you think, wow, the stock surely is going to go up. But they're kind of holding our hand towards the future. Remember that starting next year, they won't give us those net new subs numbers at all. And for the market, that's been a concern about the long-term growth narrative. There are some factors at play, including FX as a factor in the current period. We emphasize so much how they perform in America, but in other emerging markets, in Latin America in particular, they talk about markets like Argentina, local inflation there, currency impacts there being a factor. I guess the story, even though the stock's down 6% after hours, is the ad-supported tier is working and the password crackdown has worked in the quarter gone. Maybe the market just doesn't see a story of what's going to drive growth from this point onward.
Well, what maybe is going to drive it is some of the new genres it's going into in terms of content. I'm thinking about NFL, right? There's going to be 2 live NFL Christmas games. There are also WWE. These are things that they're rolling out in terms of content that maybe bring in new subscribers, new eyeballs. So they obviously have to spend for these things. That's an important part of the Netflix story.
You don't want to talk about the hot dog eating competition? I thought
do
that's
wanna
where you were
talk
going to go with that. I mean,
Yes.
in the quarter just gone, one of the big factors they call out was the roast of Tom Brady, which was a live event. And again, it's really interesting to see this negative reaction. Mm-hmm. It's astonishing what they did in that quarter. They account for 8% in the most recent month of the total streaming market, almost double the percentage value of all their competitors in that streaming market. And they have a pipeline of things to come, like you say. So I don't know, maybe the street, even though they weren't so expectant on the subscriber growth in the fiscal second, maybe they were hopeful about somewhere else. And I think I heard you, Scarlett, talk about the debt burden or debt situation that they're rethinking as well. They've been calling on the market to say, judge us by traditional financial metrics, not by our subscriber base. Here's some judgment for you.
Yeah, and that judgment's going to get a little bit harder. It's interesting, too, when we're going through their strategy, at least as what they laid out in their shareholder letter. They make a very explicit lob here at some of the bundling that we've seen in the streaming space by some of the, I guess, more traditional providers here, and basically saying they're not participating in that. They don't actually see a need to have Netflix bundled with other streamers like Disney Plus or Max because, as it says, Ed Ludlow, Netflix already operates as a go-to destination for entertainment thanks to the breadth and variety of their slate. Is that slate going to hold up?
Yeah, I think that people seem to be willing to take the slate with ad support, right? Look at the ad growth in the quarter gone, 34% growth in the ad-supported tier quarter on quarter, but all the new signups, half of them were in the ad-supported tier in the quarter just gone. They don't mind ads, and one success that the bundlers have had is to say, okay, pay us a little bit more, get maybe like ESPN, Hulu, Disney Plus, but with no ads. You're getting value there, and Netflix has resisted the urge. One area that it is trying to not bundle but give more value is also in video games. You know, there's a clear commitment here to bring out video games and more cadence tied to some of their key titles.
When are they going to do that, Ed? I mean, it says in the release they're going to plan to launch 1 title a month, but it seems like most of the titles that I've seen are like whack. Let's just say it. I mean, they're just not very good. Yeah.
And they're also mobile focused, right? So if you go onto your smart TV and look at Netflix, there's no reference to game at all. They had the June refresh on that. When I go on my smartphone and I look at Netflix, there are loads of sort of mobile games that I could get anywhere else through the iOS App Store or otherwise.
Hey, Ed, for years, Netflix talked about basically anything that anyone did with their time other than stream Netflix was competition. Now they're actually getting a little more concentrated in the letter and talking about what their key to growth is, the 80% of TV time that people spend not watching Netflix. Yes, some of that is streaming, but also some of that is broadcast and some of that linear. And to that end, the company said in its letter that it's redesigning that landing page for discovery, for content, when people go to Netflix on their smart TVs. I mean, is that the golden egg that Netflix needs to figure out? That it has to give you exactly what you want to watch, when you want to watch it, and that's going to keep you there?
They've also talked historically, though, that in the battle of eyeballs, it's the TikToks and the other social platforms that they feel they're competing against, not Disney. And the market's not really ever paid it that much credence. They want to have a good product. It's not directly Netflix news, but the other big story today, of course, was, according to sources, Apple is going to spend more on backfilling its catalog.
Right.
And Netflix, while we can talk about the cadence at which they bring new content, video or gaming otherwise, they do have a decent historic catalog as well. Make it nice to look at. I think that might be the logic.
All right. Well, Ed Ludlow, thank you so much. We're going to continue to certainly break down these earnings results. Just a quick rehash, folks. Netflix extending its lead over streaming competition, adding 8.05 million customers in the second quarter, so crushing even its own forecast. But the stock has been bouncing around. It's still down, Scarlett, about 1.5% here in the aftermarket, off its lows, though.
Yeah. I mean, one thing that has become really clear from all the analyst notes is that, and the company itself, is that this ad-supported tier is very valuable because they can make more money on it. But we note that the U.S. viewers generate more of that revenue than international viewers. So at what point do they tap out on U.S. viewers who pay for the ad-supported tier versus having to find that growth in the international markets?
And they do talk about in the letter, we don't expect advertising to be a primary driver of our revenue growth in 2024 or 2025. So they talk about some near-term challenges. So we're getting some more specifics, if it will, in terms of the advertising impact and certainly some of the build out here on what it means really for top and bottom line growth. All right, guys, that's a wrap. Continuing to watch Netflix down about 1.7% here in the aftermarket. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you same time, same place tomorrow for the closing bell.